Hey guys, it's Ronnie. It is Tuesday, June 16th, and I'm going to give you a market overview for today, for yesterday, since I didn't put a video out, as well as an overview of what's going on in the macro world with the markets, and finally some trades um, that I took yesterday, as well as trades that I held over the weekend that I have since gotten out of, and also a couple of potentials for later on in the week or even into next week as we think about where the market's going and some ideas on that. All right, so to start it off, here's the weekly chart on the right side of the S&P 500. Um, we can see we have that complex trend line, that purple trend line that is acting as an area of support and resistance over the past few years. If we zoom in, we're keeping an eye on that purple trend line. Just, we were keeping an eye on it in order to have an idea of whether or not the market would still be, um, affected by that particular trend line. And, initially it was last week, and then today actually it blew through the trend line and has gone above it. So, what we're going to do is kind of take a look at what that means, what's next, and how to trade that. So if we zoom into the daily chart on the S&P 500, you can see this is level of congestion here on the left side, which was back during the February and early March crash at that purple trend line, as well as a more recent activity around that trend line, which has been it actually blew through the trend line earlier in the month, had an island reversal up here at and has pulled back uh, from this island reversal and is now pushing its way back up into filling this gap right here. So what I actually was looking at last week was this move on Thursday. It how it basically kind of looked above the purple trend line, had an island reversal, failed the trend line, and then Friday couldn't even make it back up to the trend line before it backed off. Um, which is kind of where I was going into the weekend, is to just see would this hold, right? Would this trend line hold? And it did on Monday, but then today it's actually you can see pushed through the area. It actually gapped up, fell a little bit, and then came right back up and is making a hammer. Actually, a little doji right here, right above this shorter term trend line, which is from the bottom of the crash, which is its trend over the past couple of months. So it had closed below the trend. If you take a look at this red trend line here, it's from the March lows, pivot in May, and then you know we just extended the trend line to the right, and you can see that it had closed below that trend line the past few days, but it did actually close above it today. So we have that information we need to think about too. So thinking about where is it going? What do we think? At this point, it could potentially fill this gap, right? So these are things we talked about last week as well. If it blows through the purple trend line, next move potentially this gap fill, and then the following after that, you have the following trend line as a potential level of resistance as well. So those are, and that trend line is from the all-time highs to this lower high that just happened a few days back. Um, so those are the two areas I'm looking at right now for potential areas of resistance going into, next week or later this week even. And if it does show some resistance here, I'll be looking to fade that move to the downside. So I'll be looking to sell some um, ETFs or buy some put options in order to take advantage of a short move or a retracement, uh, back down a little bit, either to this purple trend line or lower. But right now, since it has moved above the more recent trend line, it could potentially go a little higher, and that's what I'll be seeing. And it is making this pretty tight wedge here. I mean, it's not tight actually, but there is a wedge here to keep an eye out for. If it does break this trend line, obviously that's new information, and I'll have to assess it at that time. Won't be getting getting short if it like blows through this trend line, for example. So it's all relative. It depends on what it's going to do. If it does, if it acts as resistance, if the gap fill acts as resistance, we'll short there. If it doesn't, it goes through. We'll wait until we see what it does at this line, and that's kind of how we're playing it, waiting and watching, and taking the moves where we can. All right. So that's kind of the overall view of where the S&P 500 is right now. You can see just on the daily today, it had a huge gap um, based on some news. Again, we had some news yesterday that the Fed would be buying corporate bonds in addition to other things, as well as some COVID news on dexamethasone being a potential treatment for hospitalized patients, which is a steroid. So it was good news, common drug, easily available, potentially having some good outcomes for hospitalized COVID patients. Then we got some bad news on the COVID front, where China said it would be shutting down schools again due to their wave two, apparently that's been been happening there, and so they've decided to close down schools again. That caused this pretty rapid liquidation break here. You can see, and it did go all the way down to this purple trend line and bounce. I mean, it of course went below it, but it was a pretty hard liquidation break. I mean, that's a big that is a big, 50, 60 point drop in, no time, in like 20 minutes. So, it did bounce right off that line and has kind of stayed in this range for the rest of the day. So, that's another piece of information. That purple line acted as a level of support now. So we have to keep an eye out for that if it continues to be a level of support, or if it can come down below it again and uh, you know make it back into this area, this range right here. It also almost, another reason it could have spiked down is that it was maybe trying to fill the gap, right? So the gap from Monday to Tuesday, the start of it is right down here in this 3057 60 67 area. So it didn't quite make it there, and it bounced pretty hard. It couldn't even make it to the gap fill. So it was just really a liquidation break based on news, and it continued its move. And the market's up almost 2% today, despite all this. So I mean, very news-driven market, very volatile. Volatility is still above 30. So there will be exaggerated moves. There is a potential for exaggerated moves anyway, as news comes out, or as earnings come out, or whatever it might be. So just keep that in mind and be sure that you're using, trend lines, really good spots. Like, just choose your spots wisely, because you can get chopped around a lot in this market, as you can see. All right, so S&P 500 aside, let's talk about Apple. So Apple, we talked about. I got in Apple on Thursday to the short side, and got out of my a couple of my short positions on Apple on Friday, and then stayed in two. I had two call spreads that I had shorted as well on Thursday and Friday, and ended up selling them off on Monday at the beginning of the day. So you can see here we had, this is a 5-minute chart. We had on Friday, kind of a lower move in the market. And then on Monday, we had a gap down into Monday, and it started kind of pushing up. You could see it started already. It was um, first thing it was kind of lower, and then it pushed up all day. So as it started pushing up on Monday, I went ahead and got out of my call spreads, because they were profitable. They were 50%, more than 50% profit on those call spreads. So I went ahead and took that profit, and you know it's really what you're the reason, especially number one, volatile market, and options have a lot of volatility as you get closer to expiration too. So I didn't want to hold them too long either. Um, and I guess it's a good thing, because the market did definitely have a really big recovery, uh, off of that pullback that it had Thursday and Friday of last week. So Apple, is up also over 2% today, along with the market. But it's just still holding under its trend line. You can see here um, the longer term trend line in Apple that was a complex trend line that we talked about, and the all time high here of 354.77. And it did have some upgrades today. Some price target increases up to $400 so a share. So I mean, it had some good news also, in addition to the market being up. But we're still watching this all-time high as well as this trend line for an area of resistance. If it makes it above that trend line and above the all-time high, that's kind of a really bullish move. And so we're not going to look at any kind of shorts in Apple, but I am going to keep an eye on it for tomorrow, Thursday, and Friday to see what it does around this trend line. And Friday is options expiration as well. It's quadruple witching, they call it, so it's quarterly options expirations also, in addition to the other options that are expiring. So that could be a day that, I mean, adds volume, number one, to the market, but it also sometimes is bullish for some stocks. So keeping an eye on Apple. If it manages to stay below this line, I'll be looking for some other entry to the short side, especially if the market's weaker. Obviously, if the market continues to be bullish, I'm not going to look to short Apple. And that's a good rule of thumb anyway. If you're looking to get short a stock, you want the market to be going in the direction that you are trading. So if you're trying to short, the market should be either neutral to down or going down or weakening versus strengthening. Same thing if you're going long. You want a market that's neutral to up or strengthening, from a weak position. Um, so that's Apple. Out of it, I did get into a couple stocks on Monday, it, using options, which I was sweating pretty hard this morning, actually. So we'll talk about a couple of them. So one was Carnival Cruise Lines, and the other one was actually an ETF in an emerging market that we'll talk about. So Carnival Cruise Lines really, I had my pick, I guess, of the cruise lines to short. I was really looking at casino stocks, cruise lines, travel stocks. They've all been recovering quite nicely off the bottom, but cruise lines have been still showing some relative weakness. Because if you look at a stock, for example, like Marriott, um, you see it recovered quite a bit and then has kind of come down from there. You know, a lot of the travel stocks that look like Marriott, where they had a really big ramp up off of the bottom. But the cruise lines didn't really recover so much because I mean it's still kind of a hard thing to imagine given all the news that happened around COVID with cruise ships. I can't imagine cruise ships being super packed anytime soon. So um, actually, I did short it on Monday with a put with some puts actually towards the end of the day. You could see here on Monday towards the end of the day you have lower highs building into the end of the day. So this is actually where I shorted the stock in this area, um, and it was looking okay. Of course, you have this a little higher volume to the downside. Of course, towards the end of the day, a lot of stocks started ramping up, but I still held on to my position. But you can see what happened in the overnight session between yesterday and today. It ramped up really hard and is actually still up 5% um, today for the day, but it was up a lot more earlier in the day. So this morning, so I was sweating it hard this morning, but I actually did get more short this morning at the open. I went ahead and bought a couple more put options as it was showing weakness relatively to the market. You can see the rest of the market was going up right in the morning and in the initial part of the morning, and Carnival started to weaken. You have this overnight high, lower high, and then if you look at it on the 2-minute chart, even I'll just put it on 2 minute. You can see, you know, right down below the first 2 minute or 1 minute low is where I bought those put options. And I mean, it's pretty weak compared to the market. This is its action, right? At the beginning of the day, you can see the first few minutes of trading and 15, 20 minutes trading. It's mostly down, whereas the market was actually ramping up into that same time frame. If you can see here, this area. So relative weakness, which is why I chose to go ahead and feel comfortable pressing my bet, I guess you would call it. I pressed my short there, added a few more, and actually it's worked out very well. I was profitable. I was profitable by the end of the day, actually, but just barely. And you can see here I got lucky. Everybody needs a little luck sometimes, but I mean this was based on a fundamental reason, which is why I actually shorted this stock. And then there was news at the end of the day on Norwegian Cruise Lines, which announced that they would be holding off on any cruises. They cutting their schedule, I guess, and not really having a full schedule. Um, Up till even through August. So they're looking to push out their ramping up of cruise activities at Norwegian. So that affected all the cruise lines. So I mean, you can see here um, what I was looking for is continued weakness into earnings, and you can see that it actually gave me an opportunity to get out before earnings. So which is good. I don't usually hold into earnings, but with the cruise lines being so weak and just I can't imagine that they're going to have great earnings for this quarter. So I was the trade was to hold it through earnings for a week earnings, but with the news, it gives me an opportunity to get out tomorrow if it holds down here, um, with a pretty good profit and not have to hold through earnings, which is a win-win. So that's Carnival. So I'm still holding it into tomorrow. Let's see if it can maintain below this 1898 level and allow me to get out with a pretty decent profit there on the options that I bought, the puts. All right, second, just thinking about emerging markets. This is going to be the general emerging markets ETF. You can see, um, one second. Yep, it is EEM. So here's the daily chart. Let's move it to the weekly because it's kind of gappy. It has lots of gaps in the emerging markets chart. So you can see it has this lower high here as, from all-time high till the pre-crash high, which was actually, if you think about it, the emerging markets ETF here had an all-time high well before the U.S. stock market's all-time high, which was in February of this year. So it was already a pretty big lower high, and that was already pretty weak going into the crash. But you see that it had consolidated well into that move, well into the crash, and it has this level right here of congestion and consolidation. This whole area right here. So, if you take a look at the chart, the way it is now, it's coming up to that area. It had come up to that area, right? So if you look at the EEM chart, it actually backed away. Here's the 200-week average, backed away from there and was on its way down as of last week. So let's move to the daily chart on it. Here it is on the daily. Here's a 200-day moving average. Here's that area of congestion. It, kind of, again, island reversal, looked above and failed that 200-day moving average. And you can see it was coming off of it. And even today, it's still below the 200-day moving average. Even though it gapped up, it closed lower. So that's actually a weak sign, opening high and closing lower, which you can see it's done today. So yesterday, I actually, looking at this yesterday, right? So you can see 3 days below 200-day moving average, and it actually had gone below that 20-day as well. So that's what I was actually looking at when I was looking at India, which is what I actually shorted. So if you take a look here, India actually um, did not make it back up to its um, prior high on Friday. So I was looking at this gap here as well as the EEM chart, which you just saw, and this trend line, which is the shorter term trend line from the crash low. I was looking for the continued break of that line. So you see, it actually did that on Thursday. On Friday, it made it back above, but then on Monday, it did not. Even though it did have It started out weak and strengthened throughout the day. It didn't quite make it up. And if it did, it was just right at that. It ticked right above that prior day's high, right? And then started backing off. And so this is where around the same area that I bought Carnival Cruise Line, same time of day. I bought puts in the INDA ETF, which is the India ETF. Again, lower high, and then continued weakness into the end of the day. Below this pivot right here is where I bought the puts. So again, this morning wasn't that great. Sweating it in the morning because it had gapped up in the overnight. But India was actually much weaker than the U.S. market. It's down for the day over 1%, versus the U.S. market, which is up for the day. Like, India has a lot of political has some political issues right now with China, as well as Pakistan. There's some tensions heating up between them and China as well on the uh, border of the Himalayas. So lots going on there. Plus, it's an emerging market. Plus, the EEM is weak, and it was a promising stock. I've been looking at it for a promising ETF rather. I've been looking at it for a few weeks now, trying to get short. Didn't make it in this area, which is where I really wanted. It would have been great, but it started kind of ramping up, then just gapped down too hard, and I wasn't getting into it on Thursday. So I was waiting it for a retrace to get back in it. So I actually did fine on INDA because it weakened throughout the day. So I'm still holding it. Some targets on it. You can see it actually, if you zoom in really tight, it made it below the low of Monday, which is this green bar right here. So it actually did spike below that a little bit in this area, and it did kind of recover slightly towards the end of the day, recovering the 20-day moving average. So I'll be looking for it to have continued weakness here at the 20-day moving average. If it doesn't, we'll have to reevaluate. But for now, I'm going to put an alert at the 20-day. At the low of today, and then I'll be looking for it to break that low and potentially make it down to this Thursday low here. So that's my first target on INDA is the low of Thursday, which is it is 2676. So if you just here's the pivot here just to kind of see it. 2676 is my first target. If it doesn't make it that far, because Thursday's move was kind of hard, it was a pretty hard move to the downside. We can reevaluate, but I mean that is my target. It's still below this trend line. Looking for the first target of this 2676. Next target would be the 50-day, which is just underneath that 2662. And then, of course, if it goes below that, you'll be looking at the pivot of the May low, which is right here at 2547, around 2550, which is a round number two. And then beyond that, you have this gap here, this one, 2426, filling the gap. And then you can go even all the way to this April low for that pivot, and then the bottom of the crash, which is 2048-ish. So those are some pivots to the downside for INDA, which is what I'm looking for targets. My targets are going to be around this area here, though. I'm not thinking it's going to go all the way down there, but we'll see. You never know. And that's why you have targets to kind of establish where to pull your shorts, pull your stops. So if it crosses down below this, my stop will then move to here. If it crosses down below this, my stop will move to here. That's what I mean by pulling your stops. So as your stock moves in the direction that you're hoping for it to, or that you have predicted it to, you want to keep pulling your stops down, or selling half your position at your first target, or a quarter of your position at your first target, so that you're locking in profits, and at the same time not turning a winning position into a losing position. So that's INDA. And then lastly, there was a couple of, we talked last week about gold and TLT. So gold and TLT, which is bonds and gold. I'd been looking at those. I've been looking to get back into gold, and looking at bonds for just to see how they're moving. and I was looking to get back into bonds too, but they're showing a little bit of weakness, a little bit more weakness than I anticipated. But we'll see. We're going to keep an eye on it. So we'll first go to gold. Um, this is the gold futures forward slash GC. You can see here it's still kind of bull flagging wildly up here. Not wildly, but it's a big range. Um, so we're just waiting for a breakout of this trend line right here in order to buy more gold. If it weakens, of course I'm going to buy more down here at the bottom end of the range. If it comes around to the 1675 area, but whatever it does, I'm going to be looking for it to break out and buying more. So that's one. That's gold. And then secondly is bonds, which is the 30-year, not the 10-year, like I said in my last video. That's ZN if you want to look at 10-year. But this is bonds, and you can see it's actually it's showing a lot more weakness past few days. So it's going to have to get back up above this area right here. These few days that it's acted as a level of resistance of 178.18 on the ZBs in order for it to really be another leg up, looking for a leg up. I mean, if bonds come down to this area here, to the 200-day or this pivot right here around 167.15 on the 30-year, I mean I might be looking to get back in it down there too, of course. But I'm really looking for it to maybe consolidate, maybe come down a little bit lower and get back above this level before I'll feel comfortable getting back into bonds. I mean, again, if it makes it below this pivot right here and to the 200-day, it's still kind of weak. So I'd really prefer it not to go below this area right here. So this is what we'll be looking at, this pivot. So we'll see. I mean, I'm going to delete this one actually because it really doesn't have any reference right now. There's no reference there. So we're looking at it to hold this 170.29 area and then bounce. If it gets below, we'll have to reevaluate it because that's kind of weak for what I'm looking for in bonds. And that's it. So thanks again for sticking around and watching the video today. If you'd like to be notified of when I upload my next video, just hit follow and or subscribe. And I really appreciate you guys. Take care. Have a great rest of your evening and happy trading. Bye bye.